Hey guys, how's it going? It's Andy from MagooInvesting. Happy Thursday. Crazy, this week has just kind of flown by. So far I've had a fantastic start to my morning, had a nice cup of coffee, doing some research for this video, and I was watching the Masters. So I'm having a great day so far. Yesterday I made a video talking about my favorite video game stocks to buy, and it was probably the most stocks I've ever talked about in a single video. I think I talked about 7 of them, and just my luck, I uploaded the video around 3 o'clock and then YouTube went down. So if you missed that video yesterday, I'll link that above right now. In today's video, we're going to be talking about one of the most exciting IPOs of 2020. So far, 2020 has seen a lot of IPOs, more than normal actually. According to this article I found, there have been 369 IPOs this year compared to only 213 at this point a year ago. 2019 was pretty disappointing from IPOs from that perspective. We had stuff like Lyft and Uber that had so much hype going into it, and they really struggled throughout 2019. But then recently I made a video talking about how Prop 22 passed, and they've been pretty much skyrocketing since then. Then we also had the debacle with WeWork's attempted IPO that fell through. And then with 2020, we've had some interesting IPOs. None of them that have happened so far this year have had such a big name as like an Uber or a Lyft. We've had stuff like McAfee, the cybersecurity company, which fell a little bit after its IPO, and then Snowflake became one of the larger tech stocks after it doubled on the day of its IPO. So some big offerings there. And then Airbnb announced this week that they're delaying their filing for their IPO until next week, and Doordash and Wish are expected to IPO by the end of this year. But I do want to talk about one of my favorite 2020 IPOs in a stock that I think could realistically double in 2021. It was actually a requested video, and I wasn't really going to talk about it until something specific happened. And it wasn't the earnings report, it was the share lockup period. So I'm going to talk about that in today's video. But before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying this video, really appreciate it if you hit the like and subscribe button, as it would help my channel out a lot. Just a reminder, I am going to be making 1 or 2 videos this weekend talking about your guys' favorite stocks and giving some analysis and how I feel about them. So if there's any stocks that you would like me to cover, please leave them in the comment section down below. So today we're going to be talking about LMND. LMND, ticker symbol LMND, is currently trading for $57.90, and it's up almost exactly 100% since it IPO'd at $29. However, when it closed on its IPO date, it opened at 29 and it closed at 69. So we've had some IPOs this year that just shows how difficult it is to determine the actual price and valuation of these companies. I talked about Snowflake doubled on its IPO, and LMND went from 29 to 69 on its IPO date. So it shows how difficult it is to predict or kind of assume what the value of a company is. And so at this point, it is up 100%, but based off of the highs where it ended, it's kind of confusing on CNN Money. But compared to the overall insurance ETF that's down 8.5% on the year, it's pretty interesting. And so LMND is a very interesting company. As weird as it sounds, I might compare it to something like a Robinhood, and I'll explain why in a little bit. But I'm going to break down this video talking about LMND into 3 main sections. The first one, I'm going to talk about how the company operates, because LMND is not a stock or a company that I knew that much about before it went IPO. So I'm going to talk about how the company works. 2, I'm going to talk about kind of the fundamentals, some of the numbers that you need to know for myself to be comfortable buying into the stock. And then number 3, we're going to hop on over the charts, and I'm going to talk about what I see there and make my final determination on how I feel about LMND stock going forward. All right, so let's talk about what LMND is. I'm just going to go straight off their website. They have their About LMND section, so let me read what it says. LMND Insurance Company is transforming the very business model of insurance. By injecting technology and transparency into an industry that often lacks both, we're creating an insurance experience that is fast, affordable, and hassle-free. Unlike any other insurance company, we gain nothing by delaying or denying claims. We take a flat fee. So we handle and pay as many claims instantly as possible. We currently offer renters, homeowners, and pet health insurance. So basically the idea of LMND is it's supposed to be a transparent, quick, and easy insurance company. And the people that they're mainly trying to target are the younger generation, people that have never bought insurance before. From the information I could find is that 70% of their customers are first-time insurance buyers that are under 35 years old. So this is a very young demographic, and kind of the idea is that you rope them in at a younger age with the renter's insurance, which is relatively cheap, And then eventually when they get older and buy houses, the homeowner's insurance is going to be significantly more expensive. But they have had some problems with retention rate, as the younger generation is more comfortable switching around between companies, which I think is a good thing because it improves competition between these companies. But I think it's a really interesting idea. They say that they use an AI system to process claims and determine risk, which is very interesting and is very different than how these other insurance companies work. They say they can process claims in as little as 3 seconds, which is crazy to think about. And then some of the interesting things is that the company is considered a B Corp, which means that it is a benefit corporation status. What this means is that they have a give back policy that donates part of the money that they bring into a variety of different charities. And the way it kind of works is as you sign up, you're given the option of some different charities to pick from. And from the numbers that I could find, in 2019, they donated $600,000 to 26 different nonprofits. And so this is a really interesting thing, and it's not very common when you see these publicly traded companies, because when you think of publicly traded companies, you think of companies that are trying to make as much money as possible. So if they're donating $600,000 in 2019, how are they making money? Kind of the benefit of their company and their identity is about transparency, so it's pretty easy to figure out how they're making money. So from what I could find, from the premiums that are paid, 25% of it is a fixed fee for the company, with a surplus of it being for profit. And then the 75% is used for claims, taxes, fees, and then the remainder of that goes to the customer's choice for their charity. So what this means is this is a business of scale. As it continues to increase in size, they're going to be making more money, donating more money to charity. You also have the idea that I mentioned that you're trying to get them in on the cheaper plans with the renter's insurance and then have them eventually transition to the homeowner's insurance, which will be more expensive. And so that's kind of how the company operates. It's very cheap. It's very easy to do online with the app. It's very quick. And that's why I was kind of comparing it to something like a Robinhood. Robinhood changed the game when it came to investing, because in the past it was much more difficult to make transactions. It was expensive. You had these commissions. And it changed the way that people were able to invest, and it made it so that the younger generation was comfortable buying into these stocks, which is great for everyone. And so I think Lemonade could be something similar to that, where it's making it very transparent. Everything is upfront, it's relatively cheap, and it's giving people the opportunity to buy insurance that maybe didn't think they could afford it in the past. So I think it's really interesting off of that. Now let's talk about how the company's actually been run and how the stock has moved since it IPO'd. So as I mentioned, it jumped 139% on its IPO date of July 2nd. And then their earnings report was very interesting. I've always talked on this channel why I don't buy IPOs. And the main reason is that when a stock goes IPO, some of the insiders, people that work with the company or helped it go public, get some shares as kind of it's almost like a thank you, or like they're part of the company. And so they're given these shares, and it makes a lot of people a lot of money very quick. And one of the restrictions is that there's a share lockup period, which is usually 180 days, where the people that are given those shares aren't able to sell them off. Because if I gave you, I don't know, $1 million worth of a single company's stock, even if you love that company, I would want to maybe sell like half of it, 3/4 of it, and kind of diversify my portfolio. It makes a lot of people a lot of money. So the whole idea is that when a stock goes IPO, the insiders aren't able to sell immediately because it could tank the stock price. And so the company came out and announced that their share lockup period was going to happen 24 hours after their earnings report. And so that is what recently happened. And that's why I've been waiting to talk about this stock, because now I do feel comfortable buying into a stock after their share lockup period. And so from that earnings report, things look really good, but as it did coincide with the share lockup period ending, the stock was down around 5% as a result of those moves. From that earnings report, they narrowed their loss to $30.9 million compared to $31.1 million a year ago. So not that much of a narrowing, but it is a step in the right direction. But some of the really interesting things is that their total customers jumped by 67% to 940,000. From that news, one prominent analyst kept his rating of Lemonade as market outperform and set a price target for $105. That's where I was getting the idea that the stock could double in price by the end of 2021. And so it is tough with a company like this because there is a lot of risk. As you talk about any company that is quote unquote changing the game, there is a lot of risk. So far things have gone very well. The company has increased in size significantly, jumping with the total customers by 67%. But this is a field that is a very well-established, very old type of business with the insurance companies. And so trying to switch things up is very interesting. I will talk about I am a big fan of them being a Class B corporation because you don't see that very often. And for someone like myself, I would happily maybe not be as unprofitable of a company if it means that money's going to be going to a good cause. I'm sure not everyone feels the same way. I'm sure there's a lot of people that wish that $600,000 that was left over was just used as profit, but that's not how the company has decided to operate. And I think that's a really exciting and really respectable way to run a business, and it's not something that you see very often. So this is going to be a company that just needs to increase in size significantly. At this point, they've been expanding. They're starting to increase kind of the offerings that they have. They announced in their earnings report that they would be offering term life insurance. And they've been starting to do stuff. I think they're expanding to France after they've already been in the Netherlands and Germany and in the United States. So at this point, they are just trying to expand. And I think they're doing a very good job of it. I think this is a company that you don't invest because of kind of the fundamentals, the numbers that you see. I think you invest because of the idea. And so that does have a lot of risk, but these are ways that you can make significant profit. And so I am heavily considering buying the stock. If my Sonos position gets taken from me and I'm 75% in cash, I think it would be a smart idea for me to buy some shares. It's not something where I put my whole portfolio on it, but this is an interesting stock. And so now that I've talked about how the company runs and how the fundamentals have looked, let's head over to the computer and I'll talk about what I've been seeing on the charts over there. Okay, so here we are looking at Lemonade, ticker symbol LMND. And as you can see, there's not as many candles as I would normally show off originally. This is the all-time chart because the company IPO'd back in July. And so you don't have as much information to go off of. But so far what we've seen is that the stock has respected a couple areas. We do have this lower area, which will be the bottom support down at around $45. You have this upper area that has been respected once, twice, 3 times since it IPO'd at around the $68 mark. And then we have this area in the middle that I'm not as really convinced about. It bounced off of here once, twice, fell through in early September, respected it from the bottom, didn't respect it going up. It's one of those areas where I would not base my trade off of it, but it is something to watch. And so what you notice from here is the purple area, which is the 50-day moving average. And so it does not show up until this point. What this means is this is 50 trading days after it IPO'd. And so as I've mentioned in previous videos, sometimes these moving averages are treated as support. And so far we have not really seen that. But it's possible that if maybe it kind of lingers around here for a second, it could be an area where it might bounce off of that. I don't think this is the best buying opportunity right now. I would love for it to get back down to this $46 mark, and I'm going to set an alert for that. But right now, I could be convinced of buying in at this point, but I do think it's going to start going lower. The momentum after the earnings report and the share lockup period has been pushing it down, and it could go further based off this momentum. Okay, so overall, I want to give my final summaries on Lemonade. I think this is a company that I would buy based off of the kind of vision and the way this company operates, and not as much based off of the numbers, the increases in revenue. Sure, we've seen some nice things with the increases in the customers by 67%, but I think this is a company that I would buy just based off of the idea. And so I think that's solid based off of that. I love that they're donating to charity, which is not something you see very often. I think the idea is very good, targeting the younger generation, and the way that you make this a successful business is you improve retention rate and you keep people with your company transitioning from the renter's insurance to the homeowner's insurance, and now that they're offering it, the term life insurance. Looking at the charts, since it has IPO'd pretty recently, you don't have as much price action to go off of. That's another reason why I don't love IPOs that much. But based off of the charts, it is looking like it could be at a support right now. We do have the 200-day moving average, which is that purple line that was on the chart, and it could bounce off of that. It has not really respected it so far, but it could be something to watch going forward. So as I mentioned, if my Sonos shares do get taken away from me, I'm heavily considering buying into this stock because I honestly do think this could be a stock that doubles in 2021. So let me know what you think about Lemonade stock, and let me know if there's any other IPOs that you're watching going forward. And maybe something that I can talk about in a future video. But thanks for watching. I appreciate all the support, and I will see you in the next video.